This has to be one of the most fascinating annual reports in the real estate industry. It gives you really interesting insight into the way that consumers think about real estate. This is the 25th edition of CMHC's annual mortgage consumer survey. They post a couple of highlights on their site that I'm going to go through, and then I'm also going to go through a page turn of the report with the key findings that I came across. They have 4 separate categories here: first-time homebuyers, repeat buyers, renewers, and refinancers. First-time homebuyers are fascinating. The average time that a first-time homebuyer rented before buying was 6.3 years. The majority of them rented for less than 5 years. Only 28% of homebuyers thought the most valued person in the home buying team was the real estate agent. This is a really, really interesting stat here. 54% of people, of first-time homebuyers, shared their home purchase with someone other than their partner or spouse. So they basically had to bring in a co-signer. The biggest reason for this is parents co-signing on a loan because the first-time homebuyer can't qualify for the loan on their own. And 65% paid the maximum they could afford. This is a little bit scary to think about the way that first-time homebuyer sentiment is shaping our market. The main reason that people wanted to buy is they were financially ready, but 41% of people saw their primary residence as an investment opportunity, which is remarkable from my perspective. And going back to down payment sources, 41% of buyers used gift or inheritance for purchasing a house. So that's that bank of mom and dad. We had the cosign of mom and dad, and then we also have the bank of mom and dad who's actually contributing financially to these transactions. So mom and dad have a lot of exposure to the housing market, not just in their own primary residence, but in a lot of cases, the investments that their first-time homebuyer kids are making. 79% of people feel that homeownership is a good long-term financial investment. And 71% believe the value of their home will increase in the next 12 months. Think that house prices will go up in the next 12 months. Do you agree with them? Let me know in the comments because I'm curious to get your take. Jumping over to the refinancers part. So the renewers and refinancers are new additions to the report. The 2 biggest reasons why people were refinancing their existing mortgage: 28% wanted to fund home improvements or renovations, and 22% were using it for debt reconciliation, basically paying off other debts. These are kind of sentiment checks from my perspective. You've got a lot of people wanting to invest more money into their existing asset, and then you've got a lot of people with debt issues that they're trying to solve with the equity in their homes. Okay, let's jump into the actual report. They've got some good visuals in here. Key takeaways this year: respondents seem to be more optimistic than last year about their purchase being a good investment. So we've actually seen an increase in that sentiment that home buyers are feeling their house is a good investment. Gifts or inheritance remained a big component of down payment for home buyers. This is a big one from my perspective. There was an increase in the proportion of consumers who had difficulties maintaining debt payments. More than a quarter of mortgage consumers surveyed had a secondary suite. And of those who didn't have a secondary suite, approximately 1 in 10 stated that they were planning on adding one. The biggest reason people wanted to add secondary suites was to cover mortgage payment and expenses, much higher than what the government is designing these programs around, which is offering homes to family members. Looking quickly at the first-time homebuyers, the vast majority of first-time homebuyers rented for 5 years or less, 60% of them. They saw an increase in rental property transactions, 35% of mortgage applicants on the purchase side this year versus 20% last year. We are actually seeing an increase in investor activity. 74% of all mortgage consumers believe their home value will increase in the next 12 months. And 73% are comfortable with their current level of mortgage debt. I don't know how that tracks with 65% of people paying the absolute maximum they can afford, but here we are. The average time needed for someone to save for a down payment was 1 to 5 years. I'd love to see this divided up into more specific categories. The largest contributor for down payments outside of savings for first-time homebuyers is gift or inheritance. And again, they mentioned that 41% of people used a gift or inheritance. Some people are using both their savings and a gift or inheritance. The bank of mom and dad and the cosign of mom and dad have a huge impact in first-time homebuyer activity in Canada. Repeat buyers, they are relying almost exclusively on equity from their previous home to fund their next purchase, with 52% using equity from a previous home. We saw an increase in the number of homebuyers who paid the maximum price they could afford by comparison to the last 2 years. That's up to 58% of buyers paid the maximum price, but way lower than the 2021 and 2022 mania markets at the peak of Canada's housing bubble. The biggest concerns that people had for buying a home was, number one, paying too much for my home. I still have a hard time tracking how this works with people paying the maximum that they could afford and thinking their house is going to go up in value. But here we are. And the next one is being able to afford those post-home buying costs. Only 40% of people were concerned about interest rate increases. The top unexpected cost for home buyers was immediate repairs. The other one was lawyer fees, which is now equally high. 34% of people felt that was an unexpected cost, whereas immediate repairs is 34%. Last year was 43%. So lawyer fees actually an increasing share of the top unexpected cost for home buyers. Real estate professionals, I really think, should be doing a better job providing that information and having people shop around and get quotes during their home buying process. First-time home buyers, when they're not properly educated in the process by the professional they're working with, assume a lot of these things get baked into the price, and there's a lot of surprise and sticker shock on closing day when there's a bunch of things that you have to pay for that can't get baked into the mortgage and that have to be paid for cash. A lot of people think they only need 5 or 10% down because they're buying with that owner-occupied CMHC insured mortgage, but a lot of things don't get baked into the price of your house, and those are things that all need to be paid cash. On the mortgage side of things, fixed rates remain the most popular mortgage, although 62% of all mortgages. There was only a brief period of time when variable rates were more popular than fixed. It was during that run-up mania in 2021 when the stress test kind of did its opposite of the job that it should have been doing and pushed more people to go to the variable because it was lower and kept them below that stress test rate. But we are seeing a decrease in people using the fixed rate. Some people are calling that the market might actually see rates declining. And so the consumer sentiment that's being communicated here is that the majority of consumers do feel that rates are going to come down. That tracks on the renewal term choices as well, where you can see a lot of people picking 3-year rates because they have here this expectation of falling interest rates. So you're seeing a huge increase, 34% of people picking a 3-year term because they expect interest rates to fall. They do a little research on financial health and challenges that homeowners have. Credit cards were the type of debt most mortgage consumers had the most difficulty maintaining, followed by their mortgage payment. And they talk about potential concerns over defaulting. If somebody's going to default on a mortgage, what's the reason? And the biggest was 70% of people, the only concerns that they had, economic reasons, cost of living increases, economic recession, or an increase in the interest rate. And 46% felt less money coming in, so potential for a job loss. We know Canadian unemployment rate is rising substantially right now. A lot of them are more income related than expense related, whereas you're seeing increases in expenses or debt problems being kind of lower on the list of concerns over defaulting on their mortgage. Home renovations, a piece that I found really interesting was that 74% of mortgage consumers said they plan to renovate their home in the next 5 years, which is a big number. That actually could bode well for our ailing residential investment industry. For the last couple of years, contractors, trades, et cetera, were really not having a good time finding customers. This could help resurrect those industries where we weren't seeing people spending money on their houses. Most people plan to fund that renovation from savings. The second most plan to use a HELOC. 46% of people plan to use a HELOC or credit or some other mortgage to renovate. They do some really good profiles on all the different types of buyers here as well. The key thing that I found here interesting, especially because I'm making this video for YouTube, although it'll probably appear on some other stuff. The biggest platform that people are using to educate themselves on this is YouTube right now. 36% of people actually did research on YouTube. YouTube is a very deliberate research platform. Like, it's a really high intention platform where people go to actually learn things, whereas Instagram, TikTok, and a lot of the other platforms are less deliberate. People just go there to shut their brain off and consume whatever's fed to them. The biggest concerns for first-time homebuyers in their financial situation was cost of living increases. And as many as 17% of first-time homebuyers have missed a mortgage payment. 60% have had difficulties maintaining debt payments. Compare that to your repeat buyers. Only 6% have missed a mortgage payment. 29% have had difficulties maintaining debt payments. Overall, I'll always find this report fascinating. There's definitely some juicy data points in here. Methodology is tough. It's obviously a survey, so you never really know, but some of the conclusions in here are absolutely mind-blowing. The amount of people that are struggling with debt, missing mortgage payments, et cetera, feels like it's actually a lot worse than what we're hearing in mortgage delinquency rates. So very fascinating stuff. Let me know your thoughts in the comments. As always, if you can, follow, like, comment, subscribe, support the video. I really appreciate it. Check out this report as well. I'll put a link in the comments. Look through it and see if you found anything that I didn't that really stood out to you. Thanks a lot, and I'll see you next week.